The New Orleans Conference, the world's greatest investment event.
Who's excited about this panel? Awesome, yeah, absolutely. It's kind of an annual tradition around here, so I'll introduce the panelists to you. First of all, from the Outsider Club, it's Nick Hodge. Oh, you can come up in any order you want. This is Lobo Tiggre, ladies and gentlemen, from Lewis James. Oh, they're getting mic'd up. They're getting mic'd up. Okay, let's wait until you have mics. That'll be better. You'll be able to hear them better with microphones, that's for sure. And Brien Lundin is mic'd, ladies and gentlemen, from Gold Newsletter, the Jefferson Company's Brien Lundin, your host, knows a thing or two. All right, excellent. There's Nick Hodge from the Outsider Club. This is the order that they're mic'd. That's the order that we're picking this up. All right, next, he's ready to go. Welcome back to the stage, Byron King from Agora Financial. Excellent. This would be a really good time to give credit to the amazing AV team who is just banging it up back there and back here and back there. And let's give them a hand. They're doing an awesome job. The video, the audio, it's all coming together. All right, and there is Lobo Tiggre from Lewis James, and I think that is our panelists. Let's welcome the moderator of the Mining Share panel, Mr. Rick Rule.
Because he's so moderate.
Good evening, ladies and gentlemen. This is a tough crew. Brian started you off about 7:30 this morning, and I noticed some of you are still here. I need to say to begin with that we're flattered by your attendance. We know it's possible to have some fun in New Orleans, and the fact that you chose to join the early part of the evening with us as opposed to the rest of the city is very pleasant. It amuses me, the segue from the last talk into this talk. You'll remember that the last piece of advice was to consider buying Greece because it was down 88% in real terms. I wonder how many people in the audience know that the Toronto Stock Exchange Venture Resource Index, which is the preeminent junior mining share index in the world, also down precisely 88%. I wonder if Greece is a buy, if the junior miners are a buy. We'll explore that fairly thoroughly tonight. I don't think my panel needs any introduction, particularly because they were already introduced. They've all spoken to you, so I'm going to pass all that. I'm going to begin by asking them each a few questions. The first couple of questions, gentlemen, I want you to be non-traditional, which is to say that I want you to answer briefly. Okay, I want quick answers to the first couple of questions, which I understand isn't your want. I'm going to begin on my immediate left. It's interesting to hear Brian being described by anybody as to the left. But anyway, the first question, which I'm going to ask every panelist, is the following. Risk to reward right now, okay? November 2018. Would you see new money going into large cap, mid cap, small cap, or micro cap mining stocks? This is a mining share panel, not necessarily the penny dreadful share panel. So if you were talking to a range of investors, where do you think the best risk to reward parameter coming out of a bear market into a bull market is? Brian, you first.
I don't know if I'd define it like that. I think the money is already, we've seen over the last couple of weeks in some of these downdrafts in the broader equity markets in the US, we've seen the miners, the broad large cap mining indexes. We've seen those really go up. And one of the big downdrafts, big sell-offs in the stock market, we actually saw the miners go up about, or the indices go up about 5 or 6%. I think that's where the first money is going to go, but I don't think that's the biggest gains you can go. One of the sweetest of sweet spots in the sector is, and has been over the last few years, is that kind of a typical downturn in mid-December, right when the Fed comes in and tries to squeeze in one more rate hike before the year is out. That's usually when we see a bottom in the market, and gold usually bounces off of that, and it usually lasts. This year it didn't last that long, only about a month and a half or so, or 2 months. But even at that, if you can buy the companies, like I said, don't exactly fit the size, but the character of those companies, the juniors that have large-scale identified resources, that just have a lot of, they might have economics in the ground, they're defined somehow, you know that they've got what is likely a deposit in the ground. They tend to move more quickly, and from the bottoms in December, they usually go up 100, even 200% over that 2 to 3 month period into the new year. off of those if we do have that kind of decline. That's the risk here, is that we don't have that kind of a decline into December.
So juniors with large resource bases,
Yes.
is that right?
Gold and silver.
I was terrified with that long answer that you weren't going to get around to answering the question. I'm delighted that you finally came back around. Nick, large caps, mid caps, you're a generalist, small caps, micro caps, where do you want to be in the mining space? You can do anything.
I think the mid caps are attractive right now. I think you're seeing a kickoff to an M&A boom. We've seen some significant transactions in the past, call it 6 months, from Barrick to Northern Empire to some other ones that you've seen. Pogo went away recently. And so I think the mid-tier producers, I'm talking 100 to 250,000 ounces, lowest cost quartile. I think these are going to be the targets that are going to supply the next round of reserves and production to these majors who are so desperately looking for it. Look, Sean Boyd from Agnico Eagle said last week there's simply too few players out there looking for, or there's too many players out there looking for too few projects. And so if you look at quality projects, I'll throw names now like Teranga or Atlantic Gold, for example. I think these are assets that have to be acquired in the next round of M&A. And at that, it's relatively safer than the juniors at this point because they're actually generating revenues.
Thank you. Byron, same question.
Same question, similar answer to Nick's. I think a lot of money is going to flow into the mid caps. I would add to his points that where's this money coming from? This money is coming from people in the big part of the stock market who are watching their Apple stock and their Facebook stock and their Google stock crater, and they're taking it off the table and they're saying, where can I go with this stuff? And somebody says, oh, gold miners. And they say, what is gold? What is a gold miner? They have no idea what it is. But when they look at the large cap guys, they say, ooh, I don't know about that. They look at their last history of the last 5 years and they're scared off. And then they look at the small and the juniors, or the small and the micros, and they say, I have no idea what these guys do. So I think by the process of default, much of the money would flow quickly into the mid-cap gold players.
Lobo.
Uranium. Size doesn't matter. High margin uranium.
Large cap, mid cap, small cap?
I'm obeying your prime directive to be brief. I'm not obeying your instructions on size.
But evasion doesn't count as brief. There's all size uranium companies, big ones, medium ones, or small ones.
I said high margin. I don't care what size.
Okay. He ducks. Okay, that's fair enough. We'll get back to, well, we'll do that right now, as a matter of fact. We'll go backwards. I'll give Lobo a question that he has a chance to answer. I want to ask each of you to describe what your favorite commodity theme is and why. In other words, mining stocks cover all sorts of flavors. Which commodity attracts you and why? Lobo, I think I know the answer, but let me ask you the question. What would be your favorite commodity at this point in time in the market?
Well, that's the title of my talk tomorrow morning, so everybody gets to sleep in. You get the sneak preview. I think uranium's absolutely baked in the cake. The production costs cuts that were just mentioned by the previous speaker are huge. When you shut down one of the highest grade uranium mines in the world, that really tells you something on the supply side of what's going on. At the same time, the demand has turned around. The Chinese, I just saw a report in Reuters, they're expected to increase their consumption by ninefold consumption, never mind the leverage you get on the equities. By 2025, not 2050 or 2100, 2025, ninefold increase. And the Japanese have restarted and are continuing to restart. So I'm extremely bullish. I do think the technical support, the fundamentals, and I'm looking for high margin. It could be exploration with high margin. It could be production with high margin. I want something that's going to make money.
With the caveat, of course, that at today's uranium prices, with the exception of Kazakhstan, there is no margin.
Yes.
No margin.
Yes.
So we're assuming a higher uranium price. Right.
Yes.
Byron, same question. Favorite commodity theme. Which commodity do you want to be into not to the exclusion, but what's your favorite commodity?
Well, I think that the arc of supply-demand right now is bending towards copper, towards the red metal, because really, if you look at the next, say, 5 years to 8 years of the copper industry, you pretty much know where all the copper is coming from. The mines have been built, and you pretty much know what's happening to a lot of those mines, and that is that they are in terminal decline. If not, they're going to be closing in the next 5 to 8 years. So I see a real shortage there. So I see support for the price. I see some new projects coming on, but you've got all sorts of operational and commissioning risk with that. And I see very strong demand from so many different ways. World economic growth, the whole electric vehicle thing, and so I see a supply issue. I see a demand boom, and I think that the big copper guys have to refill the pipeline with some quality smaller companies that they're going to buy up.
So I'm interested in this. Let me ask you one follow-on question. In terms of playing this theme, would you be buying the Rio Tintos of the world? Would you be buying the dominant copper producers? Or would you be looking to buy more leveraged companies or the ones that the big guys would buy?
I wouldn't really go for the big guys, not the Freeport McMorans or the Rio Tintos of the world. It would be more like companies that have something that you can put into development or that's can I mention names? Are we okay with it?
Please.
Excelsior Copper.
Please. Nobody here wants to make any money.
Yeah, Excelsior down in Arizona, just southeast of Tucson. They just got the final holy water on their final permits from the EPA. Holy water, that's a pun. I didn't even realize it. And because it's an injection permit, and they just committed to the $75 million of funding that they need. These guys are ready to go operational, build their mine, which tells me that they're either going to build the mine and make some money for the shareholders, or somebody's going to come in, buy them out, give the money to the shareholders, and somebody else will worry about building the mine.
Nick, same question.
Is there a time frame or just until I'm right?
My own time frames are long because I'm old. If you were going to tell people in the context of their mining investments what your favorite commodity was reflected in mining stocks, what would it be?
Yeah, I think I'm going to go with uranium as well. No one is making money right now. As Louis said, MacArthur was just shut down. The Kazakhs are IPOing their uranium production arm, which controls some 30 to 40% of the market, which means they actually have to act like Western capitalists and not just flood the market with their uranium. There's been a series of new funds created, whether that's the Uranium Royalty Corp that's out there now or the Yellow Cake Fund that's going to be absorbing supply off the market. Cameco is out there buying supply off the market to fulfill their contracts. There's the Section 232 petition that's working its way through the U.S. Commerce Department, on which the president is going to have to make a decision in the first or second quarter of next year that I think will go positively. And so there's just a cadre of catalysts in the uranium sector that are too positive to ignore.
And finally, Brian.
I think we all agree that uranium is next year's really big story, and I think that makes it 5 years running that we've said that.
That's why I asked about the time frame.
Yeah. So I can't disagree with that. It is a story that's powerful, inevitable, and hopefully imminent. So I don't disagree with that one. But I would say that I tell people all the time, if you like gold, you have to love silver, and I like gold. So I guess that makes silver my choice because it offers an innate leverage to gold. I think there are a lot of factors that are pointing toward higher gold prices. And if that's your thesis, then you want to get that leverage. So you go to silver, and there are a few companies out there in that area, but they will be much more leveraged than a corresponding gold company.
And in just a moment, well, a couple moments, I'm going to give you a chance to name some names, so be ready for it. The next question I want to ask is a fairly complex question, so I have to explain it a little bit. In my own talk today, I talked about sectors within the mining share market that were attractive to me. Those sectors were takeover candidates in the first instance, which I think is timely. The royalty and streaming companies, where I think that the value proposition is misunderstood by investors, and prospect generators. Knowing what I think, I want to know what you guys think, not about those sectors, but if you had to find a sector theme away from commodities, which sectors, would they be drill hole plays, would they be takeover targets? And I'll give you guys a chance to think about this because this is a complex question. But I want to know what sort of sector themes you think are particularly attractive, particularly sector themes that you think other people aren't thinking about for various reasons. Remember that this audience didn't come here for sort of mainstream pablum advice, but they have a specific interest in information about mining shares from people that make their living in mining shares. And Brien, of course, I go backwards and forwards, and we're starting that question with you. Sector themes in mining shares.
Yeah, I don't know why I got seated on the end. I'm supposed to have some pull around here. Sectors, well, just to repeat myself, I think short term, I think companies with large resource bases that are selling at near low levels, if we do have a decline in the overall area by December, and really even if values stay flat, I think there's a very good chance that those companies, those being the Almedens, the Sabinas, the Midas, the companies with a lot of resource. Skina is another good one that has a lot of high-grade resources. The list is fairly long right now. There's probably a half dozen or 8 companies out there that qualify. But those are the kinds of things that I think will move first when the metals prices start moving.
So Brien, just to make sure that I and the audience understand your answer, are you talking about the optionality plays where you have a large resource base that might not be economic at this price point?
I think that's a subset within what I'm talking
Okay.
about. I'm talking about a large group of companies that have identified resources. I know that a lot of people, well, Brent's not here, so that's one less person that doesn't like the optionality plays on this panel. But I do like the optionality plays. I think there is an argument for that. I don't necessarily think they're going to be as leveraged to the immediate move as the companies that have actual economics on their projects. But I think over time, if you have an extended bull market in gold, you have those resource bank plays will be really big winners.
It's probably appropriate to acknowledge here in New Orleans that the best early proponent of optionality that I know of in 1990 was one James U. Blanchard,
Yes.
responsible, among other things, for causing me to finance Bob Quartermain and Silver Standard, encouraging the formation of Vista Gold, Seabridge. Jim Blanchard was a guy who believed in higher gold prices, and he sure got the optionality play right in the 90s, if you'll recall.
I remember that meeting. I was
Stunning.
in that room.
Stunning. Nick,
If you missed
sector themes in mining, what's attractive to you particularly, or unattractive to you? If there's an overbought theme that you want to talk about, we can talk about that too.
If you missed Rick's talk, he's interested in M&A, and he's interested in royalty and streaming companies, and he's interested in exploration via prospect generation, and I believe he'll be putting some list up January 15th. I'll plug you, because I took notes.
Yeah.
So if I'm answering the question, I think I'm going to say brownfield assets that are being revived in some way, that we know there's been a history or a legacy of past production, and we have some infrastructure built out that can reduce the capex and that are somewhere on the road to permitting or restarting that mine for a couple of reasons. One, they'll have a known resource base. I'll mention a company like Midas as well, something like 6 million ounces of gold. And no, they don't have to be optionality, because if you look at Midas's PFS, it's something like just under or just around $600 all in sustaining costs. And so you've seen over the past couple of years, mid-tiers and even some majors have shedded some of their non-core assets. But that doesn't mean that they're not good assets. It just means that they weren't getting attention in those mid-tiers and majors portfolio. And I think in the next cycle, you'll see those projects restarted. And it's good to bet on something that was already a mine as opposed to trying to build something from scratch. It's cheaper and it's less risky. And so I would take a look at some of those brownfield companies out there. Midas is one. Revival is another that's reviving the Bear Track mine in Idaho that they got from Yamana, for example. And so assets that have been in production before and have some sort of infrastructure built out, a resource tied to them, and are maybe in some of that boring part of the life cycle of a mining company chart that you see so frequently, because while it's boring now, I think we're going to be coming out of that for some of the reasons we've discussed about M&A and things like that.
Byron.
Well, I think if we want to look at, say, between now, right now at this conference, and a year from now when we're all back here, which I'm sure Brien will let you sign up for next year now, towards the end of the conference.
Thank you for
that.
that.
I think the thing that will reward everyone who gets into it would be any company that has a very strong advanced stage development that is ready to roll over into production inside of the next year. And I would, I'd look at a company like McEwen Mining, MUX. They have the Gold Bar project in Nevada that is almost ready to go. They should be moving, moving rock and moving machinery and pouring some gold, 6 months. A company that I've been following for a while that's doing absolutely just on a tear up in the Yukon is Victoria Gold. I was talking to the CEO, a couple weeks ago, and I said, "How's it going up there?" And he says, "Oh, we're working." And I said, "Well, when are you going to quit for the winter?" And he says, "Well, we don't quit for the winter." And I said, "You got to be kidding! It's going to be 60 below zero." He said, "We're working," and they're going to get that mine up and running and built, and it's going to be a happening thing by next year. I like Midas. I like what I see in Revival. On another angle, I strongly suggest that if you haven't yet, you pay a visit to Great Panther. I just had a wonderful talk with the CEO there. They're not building something; they're buying something that's already built, and they're buying it for quite a steep discount. So again, it's not quite a development, but it is a serious addition to the volume of production that you're going to see very soon, and it's going to mean a lot of money at the bottom of the cash register.
Note to Byron, when you visit with those development stage companies, you remember to tell them that your friends at Sprott Inc. are the largest and finest providers of development finance on the planet.
I never fail to talk about you behind your back, Rick.
Ladies and gentlemen, take note.
In a nice way, always in a nice way.
New Orleans has been wonderfully commercial over 31 years, which is why I do fine here. Lobo.
I agree with Byron, though I very narrowly define it as what my former employers used to call the golden runway. As longtime readers know, I sent some very bright young fellows to dig into the data on this. We found over 100 cases of first-time mine builders. So it's not just any development, it's not additional, but when you make the transition on that famous chart, right, from explorer to producer, we found, much to our surprise, that the average gain across over 100 cases was over 100% from the bottom of the trough in the boring engineering phase when you decide to build your mine to that first pour. And by the way, they typically came down again a bit after the first pour. But I was gobsmacked. I did not expect that rise to be so great. And that happened in bear markets, that happened in bull markets. It's extraordinary. In a bear market, the rise was not 100%, it was around 30%. If you look at in the bull markets, the rise was higher. And here's the real amazing thing, is that if you take the top performers, the top 5 first-time mine builders in the data set, they averaged around 700% gains. That's around the order of magnitude you expect from a discovery, right? A 10-bagger. Okay, 700%, not quite 10-bagger, but it's close enough. I'll take the money and run. But what are the odds of making a discovery? Even the best in the business take years if they succeed at all. But the odds of completing a mine build, 95% of the companies that started to build their mine completed it. That's extraordinary. 95% odds on a double or better.
Lobo, I found that study to be very, very interesting when you first wrote it up. Do you still have that study available?
It is property of my former employers at Casey Research.
I see.
So yes.
So you can't give it away.
So I like that data. I don't have. I'm rebuilding it. But it was my idea.
I understand.
And I'm expanding on it. And
I was just going to suggest that if people wanted that study, I found it to be an extremely interesting study and also well written.
And I have an idea for what makes the top performers too.
If people wanted to access it at some point in time,
yes,
you may be able to provide
There will be a new and improved version on my website. Thank you very much.
Thank you.
IndependentSpeculator.com.
So I'm going to move now into a sort of a much more speculative venue in the sense that the answers that you're going to give are almost certain to be incorrect, but I think they'll amuse the audience greatly. My experience in terms of the cyclicality in the junior resource sector has been that in down markets, the sector, as represented by a broad index, is down anywhere between 50 and 60%. This down cycle being the exception, down 88%. I've also found in my career that bear markets are, of course, the authors of bull markets. And my good friend and mentor, Ned Goodman, told me that after the cycle's been down 50%, in the next 5 or so years, it can be counted on being up 400 or 500%. Now, I think you're going to have some fun with this answer, and depending on the answer you give, this will be the most popular panel of the session. In a circumstance where the normal down cycle is 50%, and this down cycle has been down 88% or 90%, Do you believe that past is prologue and that the upcycle will reflect the depth of the down cycle? So the first question gets answered yes or no. But the second part's more fun. Over the next 5 years, how high do you think that the upcycle goes as a consequence of the down cycle? Lobo, since we ended with you, we're going to start with you. Is past prologue, yes or no?
Yes.
If yes, how high?
Hesitant to say sky's the limit, but I think not only, I wouldn't go on it's down 88%, therefore it has to spring up higher. I'm a fundamentalist. I look not at the chart, but all these crazy things that have been done since 2008, all that stuff is going to come home. The piper has to be paid. I think we're going to see a broad resource boom for the record books. I mean, we will not have seen anything like this before. And I think the precious metals, when the panic mode really sets in, are going to blow past most people's wildest expectations. That's a big arm-waving statement. I'm happy with my first-time mine builders that give me good market, bad market, odds are success. But you asked me a question. I think all of you are going to see something you've never seen before in that market.
As your former employer, Doug Casey, would say, your lips to God's ears. Byron, is past prologue, first of all, and if so, how high is high?
Well, the past is prologue, yes, and I think that when the dam breaks, you're still going to have to have been a stock picker in the sense that you want to be in the right kind of the best stocks. And if you're here in this room, you're already there. You are all special for being here, as opposed to just sort of being out there, not caring about this whole sector. But the sector is going to go up. It's going to lift an awful lot of boats, the good, the bad, the ugly. The good boats are going to get lifted a lot higher. I mean, 5 to 10 baggers are going to be, the norm, I think, for quite a few of the better companies. And some of them are just going to be absolutely stunning. You're going to be, if you haven't retired yet, you will. If you haven't figured out how you're going to pay your kids' tuition to Yale, you will. It's all good.
As far as the audience is concerned, we're 2 for 2. Are you going to fail us, Nick?
Yep.
Have at it.
I have no idea. I mean, that's a crystal ball question. The previous questions were opinion, and so you simply can't know the answer. What I would say is that if you're, you study the market and you study the history of the market. Let's take a slice of uranium, for example. When the mine flooded in 2006, 2007, we had stocks running some 10 to 30,000% uranium stocks, and so yes, I believe you can see that again. And on the precious metal side. I've been talking a lot lately about Jim Dines, and he says at some point we could see $3,000 to $5,000 gold based on the amount of fiat that has been printed and the amount of debt that the world has racked up, both public, private, and sovereign. And so, yes, I think you could see a drastic melt up in which you will see fantastical gains. When that will come, I have no idea. And so my advice would be invest in the most quality companies you can when you're speculating. Invest in people that have done it before. Invest in the lowest cost quartile of production, because as we know, the market can remain irrational much longer than we can remain solvent.
And finally, Brien.
I agree with everything that's been said, but I think, yes, I do think past is prologue. Yes, I do think we're going to have a really big, probably the biggest ever extended bull market in gold. I hope we don't have a blow off. I think there's a lot of evidence that we will, because of all the things I talked about in my speech in my workshop last night, all of the monetary issues, all of the debt that's out there, and the stresses in the world financial systems. But we should hope that it isn't a really rapid buildup and blow off. We should hope that it's an extended market run like we had from 2001 to 2008 and in a bit from 2009 to 2011. Because during that period, we had a lot of companies that went up 4 or 5 times over. We had some 10 baggers, we had some 20 baggers. But what happened was the people at this conference and other conferences really involved in this sector, that educated themselves on what the best plays were. They'd have a stock that would go up 4 times over. They'd take the money off the table, put it in another one, might go up only 3 times over. They'd deploy that in another one that might go up 10 times over. But you get the point. It's that kind of exponential gains that was possible during that period. And the key just to get a bit off topic during that, is to take money off the table. That's a whole nother story. I hope we get the chance to get to that. But we do want a longer term bull market. I think we've got a real humdinger on the way.
I would echo that sentiment a bit, but I would also say careful what you wish for. Rick, you and I discussed last week, $3,000, $5,000 gold, you have a lot more problems on your hands with the rest of the economy.
Yeah.
Sobering statement, which I happen to believe in. So far, I think the panelist has done a great job of educating folks on a very wide variety of subjects related to the mining share panel. And I have to say the audience has listened very politely and astutely. Now, the audience is going to get their pens out, because the education part is over. I say every year in this panel that the panelists believe their job in a biblical sense is to teach everyone how to fish. But that's not what y'all want. You want the panel to catch some fish for you and clean them and serve them up perfectly done with appropriate garnish. So we're not teaching folks how to fish anymore. We're delivering them some fish. I want each of you to name a couple of names. At least one of them has to be an exhibitor here. And another one.
Thank you.
And by the way, you can say that this company that's exhibiting here is a total piece of garbage, and I think you should short the hell out of it. I'd like to see Brien do that just for fun. Anyway.
And yet I keep inviting him back.
I'd like each of the panelists to name at least 2 stocks. The audience would accept 3. And I'd like one of them to be an exhibitor here so that the audience can practice the lessons that they learned earlier in the session in real time with exhibitors tomorrow. That was Nick. Brien, I ended with you. I'm going to start with you. I'd like 2 or 3 stock picks, and I'd like at least one of them to be an exhibitor here.
Oh, you can count on that. In fact, I'm going to give you 7 quick names, and of those, all but one is an exhibitor. One of the things you want to do when you go around to talk to companies is gauge the width of their smiles. If they're an exploration company, that smile index, I think if you go look, see Gino Roger at Midland, you can't wipe the smile off his face. So I like that story. They've got a great discovery, the Mithril discovery. And I think news is forthcoming on that. Nordic Gold is a company that will join the ranks of gold producers by the end of this month. I think it's undervalued right now. Thunderstruck, I can't say much about. I just think they've got turned the corner and making some good progress on their properties in Fiji. I'm also the chairman and a big shareholder, so there's that disclaimer. I'm a big shareholder of Sojourn. I love that management team that's running it. It's a prospect generator. And I just had a chance to go by their booth, and they have some samples that they got from some properties that I knew well before over the last few months. I haven't heard from them over the last few months, but it seems like they've made some really big advances. Vendetta is a company that I don't think will be here around in 6 months. There's a good chance it won't be around in 6 months. They're getting a PEA done on their zinc lead project in Australia, and they have a lot of likely buyers. Great Bear is up about 10 times. It's already a 10-bagger from our recommendation in a Gold Newsletter alert last December. Hard to recommend a stock at that level, but I don't think there's another junior out there that has the kind of upside that it has. You should really talk to them and listen to their presentations and get the story. Revival is another company, has a sizable resource right now, will build that resource, and I think the management team is not satisfied with that project. It's a very good management team, and I think they're going to go there. I think they're already on the hunt for other projects right now. And that's my list.
Nick?
Well, I'll just start right on Brian's heels with Revival Gold, who I've already mentioned during this panel, RVG in Toronto, RVLGF in the United States. The resource Brian mentioned is 2 million ounces. They're targeting a resource update, 3 million ounces. There's a couple 100,000 ounces sitting on the leach pad there from the project when it was in Yamana's hands. And again, I'll echo Brian. I think they're on the hunt for something else. Midas Gold, we've mentioned on this panel, MAX in Toronto, MDRPF in the United States, 6 million ounces in Idaho, bipartisan support in the state, an important antimony credit, which we've now deemed a critical metal here in the United States. They're going through permitting now. I would argue there's much, much more exploration upside on that project than anyone could imagine. Barrick came in earlier this year for a 20% stake. There's something going on with Barrick's ore at Goldstrike. They need the sulfur content to help their processing go better in Nevada. And so I think you could see Barrick make a swipe at Midas. I'm going to keep going down the list of sponsors. Energy Fuels, we talked about uranium. They're the largest U.S. uranium producer. That doesn't mean much because it's only 500,000 pounds, but nonetheless, the stock has nearly doubled since January. They've got a vanadium credit now. They've got the only mill in the United States that can process both uranium and vanadium. UEC is an optionality play for uranium. They got fully permitted Palangana operations in South Texas, completely leveraged to the price of uranium. They've got no production going on now. Fission Uranium is over in the hall. They've got the independently ranked best undeveloped asset of uranium in the world. Some 100 and change million pounds likely growing from there. Updated metrics due out on that project by the end of the year. And I'll give you one that's not over there. That's an exploration play in the fast heating up district. The Puno Belt in Peru is Palomina. That's PA in Toronto. It's run by Andrew Thompson. He did well by his shareholders to sell his previous company, Soltoro, to Agnico Eagle in 2015 during the previous downturn. The project he's onto now has been ground truthed by local artisanal miners. There's visible gold. He just trenched over 600 grams per ton down there. They just finished flying it last week, and he's got a very, very serious land package that is now able to be accessed because of roads that have been built in that country.
Did you take a breath?
I don't breathe.
Byron.
I've mentioned a few names already. I'll mention them again real quick, just in case you didn't get them. But McEwen Mining, Mux, Victoria Gold, Excelsior. I mentioned Great Panther. Take a look, have a talk. I like Midas. Very, very, very well-run company. Wonderful company. Tiggre Resources. Riverside Resources as a prospect generator, wonderful. I mean, John Mark Stoudy is just first class. If you haven't met him, please do. Auryn, A-U-R-Y-N, they're here. Please have a talk with them. Take a look at Golden Arrow. They have some interesting things going on down in Argentina. So there's probably more, but my brain's sort of busy processing so much going on here.
Lobo. All right, I'll keep it simple. I'm well known as a proponent of, advocate of, champion of the Pretium guys. Super high grade, super big, permitted, up and running. There's been all this controversy. I think they're starting to finally show that they really do have a mine. It really is there. And if that's true, it's deeply discounted, could easily double all by itself without gold going up, with nothing changing. Simply the skepticism falling away, and that stock could double. And I think it gets taken over. That kind of high-grade, large asset with huge blue sky still out there in a safe mining jurisdiction, that doesn't stay outside of the majors. If they can prove that it's there, de-risk it in the last sense, I think that gets taken over. I own the stock, full disclosure, PVG on both in the US and Canada, but I believe that one has extraordinary potential in the near term, regardless of what happens with metals prices. Another stock I like a lot, I think of sort of as maybe I won't make that comparison. I like Silvercrest a lot. I do not own the shares right now. I just sold them because I made a bunch of money. It was a very quick win in my portfolio. But I think they have a project. It's high-grade silver in Mexico in an area where the same team has done the same thing before and sold the deposit to a larger company. And this one's bigger and better, and it's wide open. They keep discovering more veins. It's SIL.V. I like that one a lot. But I made a bunch of money, so I'm no longer long. And if it got cheap enough with nothing bad happening in the company, I would buy again. If the market melts down, I look at that as a buying opportunity. And finally, I've talked a lot about uranium, so I would mention, and I have to mention an exhibitor that's here, so I guess I'll mention Blue Sky Uranium is here. They have that vanadium lining that I like. I like the vanadium story, I get it. I'm long-term bullish. I'm concerned that it's gone up too quick. But if I could have a vanadium tailwind on a uranium story that I believe in already, I like that combination a lot. So Blue Sky is BSK, and I believe they're here, so you can ask them about that. I do not own that one.
Actually, many of you don't realize this, but history was made on this panel. This is the first time in 20 years in moderating this panel that the panelists actually gave brief enough answers that we finished on time. Normally, people talk about climate change. This panel has been responsible for climate change often. The hot air that's emanated, in fact, from the dais has changed the ambient air temperature in New Orleans, but we've actually finished on time, on budget. So I get a bonus question, which is unusually fun. It might be that the consequence of this bonus session is that we wreck the panel in the eyes of the audience. So far, as I understand it, we have said risk to reward, all stocks are going to go up, so it doesn't kind of matter what you do as long as you do something. We've decided that our favorite commodity theme is everything except for uranium is our extra favorite. We've decided that our favorite sector is yes. All of us have a plethora of stocks that are going to go up. I mean, how could we screw this up? This is exactly what an audience that's long gold stocks wants to hear. So we have one final chance to screw up the panel. One final chance. What I'm going to ask you briefly is what could go wrong with our thesis? We're in a bear market. Bear markets are the authors of gold, bull markets. The U.S. dollar is going to go to the toilet eventually, which is going to, the U.S. Treasury is going to be great for gold, all this kind of stuff. This is all the good stuff, right? If we're unlucky, the stocks are only going to go up 300%, but if they do what they should, they're going to go up 1,000%. Okay, we've all heard all this pablum. What could go wrong? Brian, what could go, not everything that could go wrong. What's the one thing that really keeps you awake at night in the next sort of 12-month time frame?
Well, nothing's going to keep me awake at night after this conference is over, I assure you. But you mentioned, but you haven't mentioned global warming, and that's because Brent wasn't able to make it this year. So Brent Cook isn't here, so we have a dearth of global warming commentary. And also, I need to swear the audience to secrecy because Brent and I always had this bet every year about whether the gold price is up or down from the last panel, and it is down, so I lost the bet, so everybody keep really quiet about that because I don't have a bottle for Brent.
I accept bribes.
Yeah, okay, and you'll accept them in the bar. What could go wrong, I think, my thesis is that there's no real dollar strength. There's a long-term dollar bear market that will resume very soon if it hasn't already. However, there is an argument that there is a dearth of dollars out there, which you might find interesting or contrary to your way of thinking after all the debt and money that has been created. The issue there is that there's been so much dollar-denominated debt that has been created. So to pay off those debts, there has to be dollars to pay those off. So that, in effect, may put a bid under the dollar and lead to some dollar strength. And that's one of the things I've been thinking of recently that might run counter to my thesis, might go wrong.
As a consequence of my greed, of course, I've always had a dearth of dollars. That's an interesting circumstance to contemplate. Nick, what could go wrong?
Another high-profile nuclear incident for me, for the uranium space. Fukushima completely decimated the uranium market for the past 7 years now. While nuclear, as I often say, has been the safest form of electricity generation per kilowatt hour that the human race has ever seen, there's always that risk that you wake up and there's a 3 Mile Island or another Fukushima, and so that's one thing that I really worry about in the uranium space. The other thing is that the Fed just finds more bullets. We often say the Fed is now out of bullets, but there could be some unprecedented thing. You've seen some Main Street pundits talk about minting $1 trillion coin, for example, to pay off the debt. And so serious. That's serious, man. That's like Bloomberg commentators saying that. And so some unprecedented event that the government takes a step to evade what we all see coming.
That was a great answer. Yeah. Byron?
Well, I'm going to look overseas for my, great black swan type of event, but I do hear the wings fluttering, I suppose. I would say that the great thing that could, pull the rug out from under everything would be a total and complete Chinese crash. They are highly indebted, over-leveraged, dead cities, dead banks walking, all that sort of thing. And China if China had its own version of the U.S. Great Depression of the 1930s, because it all just fell apart, all of a sudden, all that demand for oil, all that demand for copper, all that demand for cement, all that demand for the commodities that that we all so love, I could see that crashing the prices and pulling the, chopping the legs out from under things.
Lobo, what could go wrong?
I agree with all of the above, and I would say maybe one thing that injects a little terror into my nighttime dreams would be the next Briex. We keep fearing that this could happen, and there have been some questionable things, but nothing really on that scale. With my luck, it'll be the one stock I just plugged. But a lot of expectations were that Pretium was going to be the next Briex. I don't think so. I think they're showing their thing. But if that happens, just think about it. We could be right. We could be right about the economic trends. We could be right about the fundamentals for uranium. We could do everything right, and we could pick the best companies, and they'd still all go down because some beep, 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 So that's and it's completely out of our control. We can't be the best stock picker and avoid that. We'd all get hammered if that happened.
I'm going to answer my own question on the last one. We've been in expansion now for 9 years. A tepid expansion on occasion, rotational expansion, but we've been in expansion for 9 years, and we haven't had a liquidity crisis of any kind since 2008. And I would nominate an economic slowdown, globally synchronous economic slowdown after 9 years of expansion. My experience in financial markets for 45 years is that you very seldom get 9 straight pretty good years. And my gut feeling is this one's a little long a tooth. And if you combine a slowdown with a liquidity squeeze, irrespective of the cause of the liquidity squeeze, what you learn is that stocks are stocks. When all stocks go down, including resource stocks. Tertiary assets, and there's no tertiary asset in the world more marginal than mining stocks, go down in liquidity crisis. So my own answer to my own question is a global economic slowdown accompanied by a liquidity squeeze. Ladies and gentlemen, the key to having a good panel is to have good panelists. And I had spectacular panelists, and I'd like you to join me in a round of applause for my panelists. Thank you very much.
And for the MC, great job as usual.